Good morning, traders. It is Monday, October 30th. Things are getting a little spooky out there ahead of Halloween. The market has really been selling off. We'll get to that in just a minute. SPOT was the last long that I showed you. I've been focusing on the long side because I am looking for some type of support. I'm looking for a year-end rally. To be quite honest with you, I did not expect the level of selling that we saw last week. SPOT still looks really good. I like this compression here. I like the big gap up on earnings. You can see the B, meaning B before the open. Then the stock retraces a little bit. Now, this is in the context of a very weak market backdrop. That is what the market has been doing recently. This is what the stock has been doing, trying to break out through this horizontal resistance level. Now it's tested that breakout. I believe that when the market starts to rebound, SPOT has shown that it's able to hold this compression, and I believe it's going to continue to drift higher. Now, in the context of me looking for longs and being patient and waiting for this market to find support, I've been highlighting longs. So let's take a look at a couple of the others. ADBE, I know, has been one of them. With regards to tech stocks, Adobe has actually held up quite well. So I believe that when the market rebounds, Adobe is going to do pretty dang well. Trying to think of some of the other recent longs that I've highlighted. I know that some of the retailers have also been highlighted, so we'll put up a couple of those. AEO, in fact, I know in my recent video, Amgen was another one that I had highlighted. AMGN is the symbol, and we'll take a look at how that stock has performed. And here you can see Amgen, what we wanted to have happen while we're waiting for the market to find support, we want to see Amgen preserve this long green candle. It hasn't. It's actually broken below the open of that long green candle. Now that was resistance, should be support. Support has failed, and it's failed pretty miserably. So Amgen is no longer on the table. In fact, we've got a pretty hefty reversal. So this is a failed breakout. We could see continued selling on the back end, and the stock is now below a VWAP E. If I hover over the E, we can see that earnings are actually tomorrow. Now, for those of you who are using Option Stalker Pro, earnings are critically important to us. We need to know when those releases are. When the E after the last bar is not black, when it's red, that tells you that the company is going to be announcing earnings within the next 5 trading days. So that means that you need to be very, very cautious with these, especially if you're trying to plan some swing trades. So no, Amgen, not a good pick. Well, here's what the market's been doing, and you can see that we've got this low minus trend line, 2 of them, in fact, that have been breached. We've got a low plus here, a low plus that dates back to all the way back a year ago, October 13th, 2022. Once we broke that, I felt that we had a nice path lower. You can see that the SPY is below AVWAP-Q. It's below all these major trend lines. Now we've got a bunch of them that have been broken. This is some heavy selling pressure. If I put up the major moving averages, you can see that we've blown through all the major moving averages. So the pink line is the 200-day moving average. We've got the 100-day way up in here. This is a pretty clean path down to this lower trend line here that comes into play somewhere around the 404 level on SPY. Pretty bearish price action. We're about an hour before the open today. We've got about a 30-point S&P rally. So most of the losses from Friday are going to be erased this morning. But this is some weak price action. I'm going to take off all of the support levels that we have and the breakdowns on the trend lines. I'm going to take off some of our major moving averages. We'll leave the 200-day up because the 200-day is actually the one that is still relevant. It's the one that's coming into play. So This is going to be your first resistance level. You can see how we rested above the SPY and then we had a nice little bounce. So what went wrong? Pete, what did you get wrong here? You're waiting for this capitulation low and it's not coming. Well, first of all, you trade what's in front of you. So if I feel that I'm going to get this bounce in the market, I'm not out there aggressively shorting. Would I day trade on the short side? Sure. I'm in the position. I'm out of the position. I close it down. I don't have to worry about any kind of massive snapback rally, any kind of violent rally that might happen. And while we were resting on that 200-day moving average, it was confirming support. So yes, off of this 200-day moving average, I definitely could have seen a launch even up through this downward sloping trend line and rallying into year end. We had the table set with lots of mega cap tech earnings on deck. So we had Amazon and Meta and Google and Microsoft. They all reported earnings. The reaction was pretty mixed. We had Microsoft initially was up, Meta was up initially, but all of those stocks gradually caved in and started to test the downside. So we didn't have any kind of impetus from the tech sector, and we really needed it. This is a very heavy news week. So we've got the FOMC statement coming out Wednesday. We have Apple earnings Thursday after the close. So it will be the last of the mega tech companies to report. And then we also have a slew of economic data points that we're going to be watching this week. We've got official PMIs for one. China does not release a flash PMI number, so it'll be interesting to see where their official PMI comes in. We've got ISM manufacturing, ISM services, ADP. We have the jobs report on Friday. All really big, important numbers. And again, along with the FOMC statement and lots of earnings releases. So this week has the potential to have a catalyst in there that could help the market find some support and rally into year end. If we don't get it this week, it's not going to bode well for the market. The market is already showing us that it is cracking down, and this is a seasonally bullish period that starts in the last week of October, typically runs through December, even into January. Haven't seen that yet. So pretty nasty sell-off last week, and breaking this 200-day moving average exactly how we like to break these support levels on long red candles with heavy volume. So everything looks pretty daunting in here. We do have a downward sloping trading channel in here. We're kind of testing the lower end of it. I wouldn't be out there aggressively buying this gap up this morning. Why not? Well, first of all, gap ups are one of our best setups for a reversal. So we can't make a lot of money on a gap and go. I explain this in my videos. I explain this in my articles that I've written. It's not a good scenario for us because most of the gains are already exhausted on that gap up. Gap reversals, on the other hand, offer us a lot of profit potential because as it reverses, we've got that entire gap full of profit potential. Plus, once that momentum is established, oftentimes it won't just be a gap fill, it'll reverse and we'll end up with a bearish trend day. Well, which side of the market are we trying to get on right now? Well, we're trying to get on the short side because the market has been selling off like mad. In a bear market or a bearish market, you have opens near the high of the day and you have closes near the low of the day. And that's how red candles form. So I would be very careful with this gap up today. We're looking for some signs of support in here. We've seen very heavy selling. Typically, we don't stack a couple of weeks of long red candles in here. We're going to get a bounce in there somewhere. We've got lots of news coming out this week. It's material news. It is the type of news that could help us find that support. But the type of movement that we're going to be looking for to identify that first level of support is typically not on a gap up, it's on a gap down. So what you want to see is a big gap down, kind of like we had here. So you had a big gap down to a new relative low, and then rally, rally, rally all day, finish well off the low, then you've got a chance to move higher. So you typically don't see those capitulation lows on a gap up. You're typically going to have a gap down, and in the first hour of trading, that's when you're going to have that deep, deep low, that gut-wrenching feeling that, oh my God, the market's never going to come back. And then out of nowhere, boom, 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 boom. Buyers come in, stacked green candles relentlessly. At least 5 or 6 of them out of nowhere on massive volume. You see that type of price action, then you know buyers are interested, buyers are aggressive. That is a meaningful low that they will lean on. We haven't seen anything remotely close to that. What we've been seeing is gap up, try and rally, try and rally, try and rally, and then the buyers exhaust themselves, and then the market gradually starts to drift lower, and we close near the low of the day. So take a look at the action Friday. You got this gap up on Friday. Try to move higher. Try to move higher. Now we challenge the high of the day right here. Nothing doing. We have a bearish hammer, and then we follow that up with a couple of bearish candles. We're below the VWAP in here. Okay. Sellers are still in control. Same type of thing here. You open up, you're looking for that low, you're looking for that low. The best we could do on Thursday was to stack a couple of green candles. Couldn't get anywhere back to the high, not even close to it. And then now we see a round of selling. A little bit bouncy in here. Here's the price action from Wednesday. You get this gap down. They try and bounce it. Can't get back to the high of the day. Can't even come close to filling that gap. Now we're below the VWAP. Prices continue to drift lower into the close. If I take a look at all my searches, I have tons of candidates, really good prospects, big breakdowns on a daily chart. So these searches are filled with results. If I look at the bullish searches, there's hardly anything in there. So when I go through my search process throughout the course of the day, that is a major tell for me. When I see lots of bearish candidates and lots of momentum on the downside, heavy volume, breakdowns through major SMAs, breakdowns through trend lines, I know that's the side I'm supposed to be focusing on. When I have all my dots lined up on a bearish search and it's solid red across the board, I know I should be focusing on the short side. Here, this is a bullish search. You can see how we've got a spattering of green and red. Nothing I'd really want to lean into. Let's go into red royal flush. Look at how many search results I have. Tons. Let's go into green royal flush. That's it. And one of them is VXX, which is measuring option implied volatility. The other is letter X. Let's take a look at that stock. That's actually a pretty nice stock. I like this gap up here. I like this bullish flag formation here. We've got a downward sloping trend line. Earnings after the close. Friday, stock opened and closed almost through this horizontal resistance level. Decent volume. Looks pretty good. X actually held up quite well in a down market. So yes, X would be a stock that I would put on my long list. So let's finish up with the market a little bit here. I'll describe what I think is going to happen today. Context, context, context. What is the context? The context is the market has been selling off. We're waiting for a year-end rally. There is nothing to suggest that the market is going to find support here apart from seasonality. Well, we have to trade what's in front of us. Excuse me. What's in front of us is the fact that the market has been super, super weak. So we don't want to be out here picking bottoms. We still want to focus on the short side. So your first effort this morning should be to take a look at the short side. We've got 1OP spiking near the open. That means that it's going to crest in here and it's going to give us a bearish cross. So let's see what, if any, fuel is left in this 30-point gap up. If the market can't advance, and this is going to put us pretty close to the high from Friday, well, that will be a resistance level. So if the market tries to poke through and it can't, and we've got this 1OP cycle turning bearish, then we can expect a possible gap reversal. So that's going to set us up with some really good shorts. And I would see if we can't advance at all in the first half an hour, 45 minutes of trading today, I would expect that some of the gap is going to be filled. Why? Because the market has been weak. So that's going to be our first best opportunity. We'll have plenty of time to try some shorts. What else is going on? Well, we have the FOMC statement coming up Wednesday, but that means that traders are going to be fairly neutral. They're going to be scoring up positions. They're not going to take any big bets ahead of that major news. That means that the trading volume is going to slow down. That means that whatever trend is currently in place is going to stay intact until that major news. So again, favoring the short side. Plus, we've got tons of great shorts right now to take a look at. Even when you have this type of market sell-off, very heavy selling, the chances of stacking on a D1 chart 4 or 5 long green candles closing on their high, I don't see it. What news is that going to be that causes that? The Fed would have to say, we're done. We're absolutely done. We're pausing. We might keep rates up here, but there's no more rate hikes. If anything, we'll start looking at a Q1 rate cut. All right, that would be the kind of news that would get buyers very excited. But apart from that, and I am not expecting anything close to that, that would be contrary to everything that the Fed has said to this point. What I'm expecting is that you get a bounce, and then you get a test, a pullback, and you get a higher low double bottom. That's something that you can lean into. Here, we saw this relative low. Well, the market rallied, but it did pull back, and it tested and probed for support. This is an even better entry point because now you know you're making a higher low double bottom and that this support is very strong because buyers don't think they'll have another chance to buy it this low. So they're buying any pullback in here and then you get your release. So Pete, could you please repeat that for me? What the hell am I supposed to be looking for again? We're looking for today a possible gap reversal that probes for support, that fills in some of this early gap. And then this week, if we do get that lift off and we do see buyers coming in and being aggressive, okay, we can passively try the long side. We don't need to swing trade from the long side. There's nothing to tell us that the market's going to be off to the races and have that capitulation low. So, yeah, don't be overly aggressive with your longs. Wait for that little retest. Wait for that higher low double bottom. Make sure that buyers are still there. Make sure that they're still aggressive. Then you can start to take some long swings into year end. But until then, this is really strong price action. You've got to favor the short side. You don't have to do it on a swing basis. Day trading, maybe an overnight swing on the bearish side is about all you'd want to do. And then let's see if that news is material this week and if we get that really nice market rally. If we do, then you're going to get some nice little breakouts on that initial move higher on bullish stocks. And then the market pulls back, finds a higher low double bottom. More and more and more stocks are going to start finding their way into that bullish search. that means we've got better and better prospects to look at. But right now, we go through the bullish searches. This is what we're seeing. And that's by design. That's how it's supposed to work. When you go through the searches and you see a ton of bearish results, that tells you you should focus on the bearish side, especially when the bullish side has very little in terms of results. So let's go into a search. I'm going to go into breakout and we'll take a look at a couple of these stocks and we'll find a long that might line up for us. So I already mentioned X, that looked pretty good. Boeing, very choppy. This is sticking your head in the noose. That stock has no support. There's no reason to be in that. IBM, I kind of like this. You got this earnings after the close. Stock gaps up. It's able to preserve those gains when the market is down, down, down. If this move up is fluff, you would see it instantly reversed on that type of market action. But no, it's been able to hover around the AVWAP-E. It's around the 200-day moving average, actually above it, above the 100-day moving average. IBM looks pretty decent in here. I had already mentioned SPOT. Cisco's breaking down. There's no reason to touch that. SPOT I had looked at. I like that. I think this stock is going to continue to go higher if there is market support. You can sell it out of the money bullish put spread on a stock like this, keying off of that 100-day moving average. Still gives you a little bit of cushion. I believe the stock is going to continue to move higher. Let's see what else we've got in this list right here. GPS. GPS, I think, is going to be your long for the day. This is a nice pattern. We've got a breakout here through horizontal resistance. Stock pulls back. It checks that breakout. Bullish hammer. Nice breakout to a new relative high when the market is down, down, down. GPS looks good. It is a choppy stock. Well, what should I do with a choppy stock? You don't have to chase it. You're going to have opportunities to buy pullbacks. So today, if you see the market with a gap reversal and you see the stock pulling back, we'd like to see this horizontal resistance level right here comes into play around the EMA 8. We want to see that hold. And as soon as the market shows any signs of life, market's trading a little bit higher, we want to see the stock find that support. We want to see it preserve this relative strength. In general, retailers are doing pretty well, especially apparel stocks. We had retail sales come out, very robust number, even in the GDP last week that came out at 4.7%, very robust growth. The consumer is alive and well, at least for now, and that bodes well for a lot of the retailers, and they've actually been moving higher even when the market has been selling off like this. So it's a pretty decent sector to have some long exposure in right now. Heading into year end, heading into the holiday season, I think this all plays in well into the retail sector. So keep an eye on GPS. Don't be overly bullish right now. Know that if we do have that hard low that sets this week based on all the news that we've got coming out, you're going to have a bounce, you're going to have a little retracement, a higher low double bottom. Wait for that move. That's the one that will tell us that buyers are engaged. That's the one that you can get long on the notion that we'll have a little bit of a year-end rally. But this type of price action tells me that there's not going to be a gangbuster year-end rally. When we were hovering above the 200-day moving average, it was still conceivable that we would have a nice leg higher, perhaps even challenge the high of the year. But when I see this type of price action here, it tells me that the selling pressure is quite heavy and that it's going to be very difficult to reverse. And that's why until we see that higher low double bottom, we've got to respect this move lower. I wish I could give you just something tangible to really hang on to right now, but we do have offsetting forces. Got to go with what we currently see. Be aware that there's year-end rally. See if we get that nice lift off this week. I'll be doing a video. I typically like to do them on Wednesday, but we've got the FOMC statement on Wednesday, so I'd really rather see what they're announcement's going to be like, what their statement's like, what the market reaction is like. So I'm going to do a video Thursday morning. Watch for me then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned